Before we start discussing on our subject topic, let's rewind to near past, and here we would shift our focus for the time being on Venezuela. The United States began imposing sanctions on Venezuela in 2015, but the sanctions escalated significantly in 2017 and 2018. The sanctions were imposed in response to concerns about the Venezuelan government's human rights abuses, political repression, corruption, and economic mismanagement. In 2017, the Trump administration issued an executive order that prohibited U.S. entities from buying any debt or equity issued by the Venezuelan government or its state oil company, PDVSA. The following year, the U.S. Treasury Department sanctioned several individuals and entities associated with the Venezuelan government, including President Nicolas Maduro. The U.S. government also imposed secondary sanctions, which targeted non-U.S. entities that engaged in transactions with the Venezuelan government or its state-owned enterprises. These sanctions effectively cut off Venezuela's access to the global financial system, making it difficult for the country to conduct international trade and access foreign currency. The U.S. has continued to impose new sanctions on Venezuela in the years since, as the political and economic crisis in the country has deepened. The sanctions have been controversial, with some arguing that they have exacerbated the suffering of ordinary Venezuelans, and pushed the country further into crisis. While others say they are necessary to pressure the Venezuelan government to improve its human rights record and democratic institutions. To counter these sanctions, the Venezuelan government launched Petro, a cryptocurrency, in February 2018. Petro is a digital currency backed by the country's oil reserves, and is designed to allow the Venezuelan government to access new sources of funding, amid an economic crisis and sanctions imposed by the United States. The idea was to create a currency that could be used to bypass traditional financial institutions and avoid sanctions, which had severely limited Venezuela's ability to access foreign currency and conduct international transactions. Petro was launched as an initial coin offering, ICO, and the government claimed that it raised more than $5 billion in the first few months. The currency was meant to be used for a range of government transactions, including paying for passports, taxes, and public services. However, Petro has faced significant controversy since its launch. Critics have argued that the currency is essentially a scam, with no actual oil reserves backing it up, and that the government has used it to siphon off money from the country's already strained economy. There have also been questions about the currency's technical specifications, and whether it actually operates on a blockchain, or is simply a digital token. In addition, Petro has faced significant obstacles in terms of adoption and use. Many international companies and governments have been wary of getting involved with the currency, due to concerns about the Venezuelan government's track record on human rights and democracy, with currency's lack of transparency and regulation. Overall, Petro crypto remains a controversial and largely unproven experiment in the world of digital currencies, and its long-term viability remains uncertain. Coming back to the present, it's not new that a venture of launching an oil crypto did occur in the past, targeting the petrodollar. Recently, there have been news making headlines from BRICS countries, for working towards strategies to promote trade in their local currencies, with an intention to decouple their trade from the US dollar. As per Wall Street, Saudi Arabia is considering accepting yuan instead of dollars for Chinese oil sales, as the Saudi Arabia's unhappiness grows with Washington. We all know that Saudi Arabia, which controls about 1/3 of OPEC's total oil reserves, plays a leading role in the organization. Saudi Arabia ranks second in terms of oil reserves after Venezuela. Oil reserves is an estimate of the amount of not yet mined crude oil, located in a particular country that can be recovered with current technology, and at a cost that is financially feasible, in relation to the current price of oil. Coming to our topic and talking about OPEC, it comprises of 13 member countries. Their global crude oil production share is approximately 38%, and it also accounts for 16% of the world's natural gas production. Moreover, OPEC owns roughly 4/5 of global crude oil reserves. If OPEC suddenly decides tomorrow to launch its own cryptocurrency and a blockchain for its oil sales, especially due to the de-dollarization actions from the two Asian giants, it would have significant implications on the global oil market and geopolitical landscape. We will now try to analyze these reasons and its implications in details. Firstly, the launch of such a cryptocurrency would have major consequences for the traditional oil trading system, which is currently dominated by the US dollar. Most oil transactions in the world are conducted using US dollars, which means that countries have to hold significant amounts of dollars in order to purchase oil. This has given the US an immense amount of control over the global economy and financial system, as well as allowed them to exert political influence over countries that rely heavily on oil imports. This OPEC crypto launch could potentially shift the global oil trade away from the US dollar towards this new currency. This would mean that countries could purchase oil without the need for US dollars, reducing US's control over oil market, and potentially weakening the US dollar's position as the dominant global currency, harming the country's economy and global influence. The launch of an OPEC cryptocurrency could increase the efficiency and security of oil transactions, as it would eliminate the need for intermediaries such as banks or payment processors. This could reduce transaction costs and improve transparency in the oil market. The use of blockchain technology could also ensure that oil transactions are recorded in a tamper-proof and decentralized ledger, reducing the risk of fraud and increasing accountability. Furthermore, if OPEC's cryptocurrency is successful, it could lead to a greater adoption of cryptocurrencies in general, potentially threatening the dominance of traditional financial systems. This could have significant implications for the global financial system and the role of central banks. In addition, the launch of such a cryptocurrency could give OPEC greater control over the oil market and prices. Currently, oil prices are subject to fluctuations due to a variety of factors, including supply and demand, geopolitical tensions, and market speculation. Also, its own blockchain for oil sales could assist OPEC to potentially control the supply of oil and adjust prices accordingly, rather than having to rely on external parties such as the US or EU. Furthermore, OPEC's dominance in the oil market would give its cryptocurrency significant weight, as the organization currently accounts for 38% of global crude oil production share, and 16% of natural gas production. Additionally, OPEC owns roughly 80% of global crude oil reserves, giving it significant leverage in the global oil market. The launch of OPEC's own cryptocurrency could lead to the emergence of a new power block in the global economy, potentially challenging the US's dominance, and leading to increased competition between the two factions. This could have significant geopolitical implications, since the US has traditionally used its control over the oil market as a tool of dominance and control through sanctions, like we discussed in case of Venezuela earlier. Thank you for watching till the end. See you again.